Investors are currently feeling good in the stock market, with this week's rally to all-time highs, but traders should already be looking ahead to what's next. In the short term, are we expecting the rally to persist, and does that look like a gradual grind higher, or will we see FOMO in the market and a potential short squeeze coming? Alternatively, stocks may pull back. Would such a pullback serve as a correction ahead of another leg higher in the trend, or the beginning of a reversal? To form an idea of how to manage positions with imperfect information, we can first review what's ahead, and also see where we stand with relation to key testing points. This year, attention is going to remain centered around the Fed and about when and how much they will cut rates. Any economic data out of the US will be interpreted based on how it affects the Fed's data-dependent policymaking. Currently, the street is not expecting a rate cut at the next meeting in June, but with PPI and CPI releases last week, expectations for some sort of rate cut in September have increased from just under 60% likelihood to over 70%. While we have Fed minutes on Wednesday this week, this release has been less impactful lately because the Fed has been working to be more transparent about their thinking between FOMC meetings. That's especially true of this week, with FOMC members scheduled to speak all through this week. If you're a swing or day trader, you'll want to be aware of when they will be speaking. They will largely be rehashing the data that is already available, but will give color to how they are thinking individually. Currently, it seems like the next main release that the market is waiting for is PCE next Friday. With this backdrop, it may seem less likely this week that we get some big macro shock to drive price. Rather, we would expect price action will be more driven by market dynamics, such as profit taking or accumulation in anticipation of news. Looking at the charts from last week, we pulled back to the Able trend blue dots, bouncing up off of the support in the last couple hours of the day. The price is currently sandwiched between the support on the 130-minute chart and resistance on the 30-minute chart. This matches with our expectation for relatively flatter price action. In other news, NVIDIA is scheduled to release Q1 earnings on Wednesday after the close. NVIDIA, being one of the leading stocks this year, can have an outsized effect on the overall market, serving as a bellwether for the AI theme that has been so important this year. The stock is only around 5% below its record high price and has been rallying with the broader market. So, while there are likely some market participants looking to fade the high, we might not expect a short squeeze here on an earnings beat because shorts have already been punished for weeks. Rather, we would expect smaller gains on a beat and a bigger reaction on a miss. Implied volatility is pretty high near the levels from the last earnings release, but it may be a letdown after the release. Subscribe to receive more timely updates on our YouTube channel, and click the link in the description below to view our chart library updated daily with featured signals.